Okay, we'll begin with the classic, the world's most popular currency pair, euro-dollar. So this is a daily chart of euro-dollar. Currently, at the time of our show, 111.40. It has support at 111.30. This is sort of weak support. It in the past it worked as some kind of separator. More significant support is here at 110.50, which was a line the pair bounced off just in the beginning of this month, beginning of August, okay? And further below we have 109.50, which was support sort of post-Brexit, not the immediate post-Brexit, but more at the end of July. And further below we have 109, round number, which was the immediate swing low of June 24th of post-Brexit, okay? These are the three lines I'm watching. I mean, big lines. Further below we have 108.20, a line that was touched back in March, and 107.10 as significant line of support. Resistance. Some resistance is at the post-Brexit high of 111.90. Well, since then it was broken, of course, but it was the first high. And it's followed by 112.40, which was the initial high after this post-Brexit high was broken. That's a line dating back to August. And then we're looking here. Well, it's a bit busy, a bit more choppy. 113.50 and 113.70 as highest lines we've seen so far. Above these lines, we have lines seen before Brexit. That's 114.20, actually at the night of the referendum, and 114.60, more of a historic line, not that strong as it used to be. Further above, the high of 2016 is 116.16, and 117.12, the high of 2015. So these are your technical lines for euro-dollar. Let's move to pound-dollar, to cable. I'm seeing a problem with the refreshing here. Anyway, cable, of course, has fallen quite a lot since Brexit, and we're currently at much lower levels than we used to be. We're still at the lowest levels in since, the bigger picture since 1985. Of course, above the lows, but not gone very far. So this is the big fall seen on the night of the referendum. We touched 150 and crashed all the way down. Okay, so we're not going to talk about all the lines back here that were very relevant until June 23rd, the day of the referendum, but let's focus on the lines that we've seen in recent weeks, in the past 2 months. So immediate support at 130.60. We've seen this line work here at the end of July. Further support is at the round number of 130, although it's quite weak. I didn't even put it on the chart. Further support 129.50. It separated ranges in the past, and now further support is what I call the lead sum line, the low that the pound is seen just before we learned that we're going to have a new government. So lead sum was the candidate that ran against Theresa May. Okay, so that's another line of support, and the 31-year low. About a few days after Brexit is 127.90. Okay, on the upside, so we have quite a wide range here to move around. 113.70 is resistance. It was resistance in the past few days during the month of August. It's followed by 113.60, which capped cable the beginning of August. It's followed by 134.80. When we learned that the Bank of England is not so bearish, well, at one point, this was the high. Okay, it's also the post-Brexit high. Of course, closely followed by 135. So these are the lines I'm watching on cable. Of course, if we have a run, we can break to round numbers of 140 or to the downside to 125. But so far, we're seeing a much more limited range there. Dollar yen, here we are, 103.20, so quite a big rise in the past few days. Not only the strength of the US dollar, but also speculation that the Bank of Japan will do more, even though there are contradicting reports. So in any case, 103.40 is not only the current resistance line, but it capped the pair also at the beginning of July. It's followed by 105. Okay, round number. eyed by the Bank of Japan, eyed by investors. Not exactly a technical line, but more a psychological line. 106.40 is already a technical line after it supported the pair on its way down, followed by 106.90, which provided support when the pair was trading on higher ground. 107.50 was the post-Brexit high. Remember, the yen gained from Brexit because of its safe haven character. And above that, 108.20 is worth mentioning. On the downside, we have quite a wide range here. 102 is some kind of support, but not worth putting a line on the chart. 101.50 is further support, worked well in the middle of July, followed by 100.80, sort of the last barrier before the round 100 level. Remember, when we fall under 100, we lose a digit. So that's, of course, very strong support. And it's followed by 99.60, which worked as support during the month of August. The post-Brexit low of 98.80 is a very strong line indeed, even though it was a swing level. And I'll mention 97 as another line below. Okay, before we covered three currencies, I see a question here, puzzled by NZD performance of odd and CAD. Okay. Yeah, we'll talk about commodity currencies right now, so I hope it'll answer your questions. So, dollar CAD, the Canadian dollar moves with oil prices, but not always in a straightforward manner. So oil prices did fall. We'll reach oil at the end. That's why the Canadian dollar has been moving to the upside. So some support here at 103, 130.80. Further support at 130, very round number, and also worked the support here in August, well, the end, during the month of August, I would say. Further below 109.10, not as strong as it used to be, but still worth mentioning. 108.30, a line that worked here several times as a bouncing spot here in August and also here in July. So it's strong support. 107.65 replaces 127.65 replaces 127.50 as strong support, the lowest level in over a month, and 126.50 was the low seen back here in June. Of course, it's worth mentioning the round number of 125, which is also 80 cents if you look the other way around, CAD USD. On the top side, we have 131.40 worked as resistance here in July, and then 132.40, which was the high in quite some time. If we look to higher ground, we're already at levels last seen in the spring, so it's 133.70 and 134.60, which is a very, very, very strong line. Canadian dollar is moving in a weakening correlation, but with oil prices. The Aussie, which we'll focus on later on, and the Kiwi are a bit more complicated. Okay, so the Australian dollar failed to rise to higher ground, and what cannot rise must fall. Currently at the very round number of 75. If we fall under this line, we're back to levels seen well earlier in the month. So 74.20 is further support, worked as such back in August, followed by 73.70 or 73.75, which, well, in the past capped the pair. Further support 73, which was a line of support here in July, and then when we traded in a lower range, we were between 72.50 to 71.75, and below 71.40 is another line. On the downside, on the upside, we have 75.30, 76, which is already a stronger level, and 76.40, another strong level, and here even stronger 77.40, lots of 40s here, and the top line is 78.40. We're seeing some kind of uptrend here, but I think it's losing a bit of strength. Kiwi dollar, we had lots of news from New Zealand of late. It doesn't happen that frequently. Anyway, currently we've seen attempts to break higher, quite a few false breaks by the Kiwi dollar. So this line of 73.40, 73.30. Look how many attempts to break it were made. So once we reached this line here in the middle of July, then we made it a bit higher, but no cigar, as they say. And then reached the new high of 73.80, the highest level in 14 months. But that was also a false break, and we fell back down. Okay, there might be some kind of intervention, confusing messages from the Reserve Bank of New Zealand. Well, currently we're seeing some US dollar strength, so we're back to lower ground. So if we go from top to bottom, 73.80, I'm not sure it's a real line, but well, it's the high for now. 73.40 is the line I'm looking at more closely. 72.60, 71.60, which worked as support for the pair and also as resistance beforehand. 70.50 worked as a double top right here. In the spring, well, winter, autumn in New Zealand, spring here in the Northern Hemisphere. Below the round number of 70, which again, I didn't put a line here on the chart because it didn't work very well technically, but it's of course psychological level. 69.50 provided support for the pair back in July, and 68.80, 68.20 are lines to watch if we fall to the downside. Okay. Let's continue with dollar Swiss. For those of you that don't know me, I don't like the Swiss franc because of ongoing intervention from the Swiss National Bank. In any case, we've seen quite a rally in dollar Swiss, mostly the strength of the US dollar, a bit, so maybe some intervention by the Swiss National Bank, Thomas Jordan and his colleagues. Anyway, 1950 is a line of resistance seen here also in August, and it's followed by 99, and of course the round number of parity. Okay. Maybe, sorry, 99.50 is also worth mentioning. On the downside, we have the round number of 98, a bit weaker than it used to be. 97, also a round number, also not so strong. The strongest line to the downside I'm looking at is 96.40. Okay. And even stronger here is 95.40, and of course 95, another round number. Euro Swiss ranges here are of course much tighter because the Swiss National Bank intervenes in this specific currency pair. Let's start from the bottom. 107.60 used to be sort of a line in the sand for the Swiss National Bank. It's followed by 108. Here we have a much this is sort of within the range already. 108.25, 109, things like that. 109.50, 110. The highest level we've reached is 111.20. Okay. Let's continue to more interesting currency pairs. For instance, this specific cross, Euro Pound. Of course, this is the divorce cross, if you wish, the Brexit cross. The UK leaving the European Union, but the currencies trade very nicely. Currently, just above 85, very round number. Let's begin from the top. 87.20 has been the high line. It's followed by 86, which is also, well, round number and a strong line. Currently 85, which is round number. 84.30 works as support. 83.50, and then 82.50, which is the sort of line of support after we stabilized from the highs right here. All in all, the trend here remains to the upside. Of course, to the downside, we have the round number of 80, but this isn't. We have a few more hurdles before that, so it's, I would say, 81.20, which has been the high here back in April. Okay, but the key levels for this cross are, let's put it a bit more precisely, 84.80 and 87.20 to the upside. Okay, these are some of these levels are, well, they date back to the time when the pair was trading on higher ground, which is the summer of 2013. Since then, the euro weakened against the pound, strengthened, and of course strengthened quite a lot after Brexit. Okay, euro yen, two very two currency pairs that are in high use, but not that popular. So currently we're tackling resistance at 115. I mean, they're popular in the real world, but not for Forex traders. To the upside, we have 117, which sort of provided support and some kind of resistance, and 118.50. High resistance 121 and 122.40. To the downside, we have 112.20, which proves itself quite well during the month of August, and 111. Okay. Further support here at 109.20, but this is more of a swing low. The bigger picture is, of course, decline. The euro is not, well, it was a temporary safe haven currency, but not anymore for a long time. And yeah, and the yen is the ultimate safe haven currency. Okay, this is pound yen, very popular cross among currency traders, approaching resistance here at 136. Further resistance 139, under the round number, of course, of 140. The high level seen post-Brexit is 143.40, so this is key resistance to the upside. On the downside, we have the round level of 130, but we already reached lower levels at 128.50. All in all, pound yen, many pips to be made and the same number of pips to be lost. Okay, so trade with care, with low leverage on this specific currency pair. Okay, so we covered all these currency pairs, and now let's just complete the segment with a look at WTI crude oil, which impacts the Canadian dollar and impacts the mood in markets. Inverse correlation with the US dollar, not always there, but in recent weeks it's been there. That means stronger dollar, weaker oil prices, stronger oil prices, weaker dollar. Okay, inverse correlation. Currently $46.18, 45.40 used to be a line of support, but more stronger support at 44.50. So the round number of 45 is not that significant. 43.25 sort of temporarily halted the pair's recovery. We have, remember, just in the month of August, we've traded between $39 to almost $49, so it was quite a month, 20% gap. Anyway, more to the downside, 43.25, we said that, 42.40, 41, which was the stepping stone before the ongoing recovery. The round number of 40, of course, cannot be ignored, and 39. To the upside, 46.50 and 49 are levels to watch. Even higher up, I don't think we'll reach these levels soon, but worth mentioning 51.05 and 51.60, the high for this year so far. Okay, so this completes our chart section. This time we took a zoom out and looked at the bigger picture on daily charts. Okay, let's continue with the regular show.